Welcome, I'm Ernie Goss, research faculty member here at the Craig School of Business at Cal State Fresno, and here I am to talk about our survey results for the month of June. Of course, this is the first business day of the month, and we do this every month on the dot. And so what is the survey results from businesses that for businesses in the four-county metropolitan area? What does that say for the economy going forward? And what it says is very good. For the 19th straight month, the overall index, which tracks the ISM, National ISM survey, identical methodology, identical questions, and so on. What does it say? 19th straight month that the index has been above growth neutral, so that's very good. The overall index moved from 55.0, now it's 55.0 in May, to 58.3 in June. That's very healthy. Now, it may not sound like it, but that's in a very solid growth range. Now, here you'll see where I've graphed it, and you'll see how the U.S. and Fresno have tracked since October of 2013, and it's very favorable to the Fresno area, the San Joaquin Valley index, as we call it. And as you see, the gap between the Fresno or the San Joaquin Valley index and the U.S. index is growing, meaning we're pointing to much more solid and healthy growth for the four-county San Joaquin Valley than we are for the U.S. And that's very good for the businesses and for the workers in the four-county area going forward. Our inflation gauge was up for the month from 55 to 60.2 for June. That's that's not troubling, but inflation is picking up a bit, and that's, at this point in time, that's not a bad thing. That's healthy. Employment index, wow, rose from 59.7 in May to 62.6 in June. That's very good, very healthy. We're adding jobs in the area. Unemployment rates down by 2 percentage points from this time last year. Growing jobs, healthy job growth. We're even seeing job growth in manufacturing, particularly food processing. That's very good for the region. That's very good for workers. Typically higher wages, seeing better job growth numbers, better wage growth numbers in the Fresno or the San Joaquin Valley than we're seeing for the U.S., and of course that's good. 1 out of 6 firms, that's 1 out of 6, report negative fallout from the drought. Now that's not very high. However, when we ask them about if this drought continues, how many will be affected? 2/3 of the businesses expect to be affected negatively if the drought continues. And of course, we see no reason, at least I'm not a weather forecaster, but I've heard no reason to believe that the drought is ending anytime soon. So 2/3 of the businesses they expect to be hit if this continues. Now, strong dollar is restraining exports. The export number is not good. And of course, the import numbers not that strong either. But going forward, again, I'm expecting, based upon our numbers, to see job growth for the San Joaquin Valley well ahead of the U.S. numbers, maybe even double. In other words, double the growth rate. Say the U.S. growth at, say, 1%, 1 to 1.5%. San Joaquin Valley about 2% growth. Those are annualized. So again, it was a good report. Now we'll wait and see when our results come out August the 3rd. That'll be our first business day of the month for August, when we'll report on the July results. But between now and then, what should you watch for? Keep an eye on the jobs report. It comes out tomorrow. That will be July the 2nd. It's early. It's usually on Friday. The folks at BLS, Bureau of Labor Statistics, want to get the heck out of D.C. and get on to celebrating the 4th, and they're releasing early. Keep an eye on that, as I've said many times, that wage number. Keep an eye on that wage number. That number growth is year over year now. This would be from June to June. If that number begins to get up to 3, it's now at about 2 to 2.5%, moves above 2.5%, then Fed's going to raise rates. I think the Fed's going to raise rates anyway in the September meeting. Put that in the bank, or at least count on that. Look at the CPI, the Consumer Price Index, on July the 17th. That's the number that we need to keep watching as that index, as inflationary pressures move upward, as I think they will. That's something to keep an eye on. Retail trade on July the 14th, Very important number, how the consumer's responding. They've been, all of a sudden they're buying. We want to see that continuation of that buying. Hopefully we will see that. What are the risk factors? What could foil all this? One thing, of course, is the Greek situation, the Greek potential default on their bonds. And that's there's a referendum this Sunday, next Sunday, on July the 5th, where they'll vote no or yes. No meaning the citizens say reject those austerity measures. We continue to want to spend more and pay less. Now the numbers just don't jive, folks. They've got to face up to these austerity measures. Will they? I don't know. But if they say no, we're talking about an exit from the Eurozone. That's Greece is one of 19 members of the Eurozone. An exit. That would be very contribute to volatility. It's not going to be that big a deal unless it spreads to Spain, contagion. Then we're going to see some impacts. The immediate impact would be equity markets, prices of stocks would drop, prices would grow, interest rates would come down, the value of the dollar would go up. But those are temporary. Don't buy into that. Don't sell into that. Don't freak out. It's a temporary phenomenon as long as it's contained to Greece. Not that it's a big deal for the Greek citizens. It's not that big a deal for us investors here, workers here. Keep an eye on the 10-year Treasury, which reflects all that. The yield has come down from 2.4 to 2.3. It's likely to head lower. Don't be buying those bonds just because the yields are going lower and the prices are going higher. I wouldn't buy into that. Keep an eye on the value of the dollar. All this is contributing toward a strong dollar, and that makes it more difficult to sell our products abroad, makes them less competitively priced abroad, and that's very important for this part of the country where a strong dollar overall hurts. Minnesota, not quite as much. Minnesota's been growing very briskly. South Dakota as well. Can't explain that one. I don't know what's going on there. At least our numbers are much stronger there. But overall, it was a pretty good report. Thanks for joining us today. First business day of the month of July. Until we meet on August the 3rd, which is the first business day of August, we'll report on our July survey results. Until then, may your economic cup runneth over, and thank you so much.